Verizon common stock, taxed at a dividend tax rate, yielding 4.17% plus a buyback. Which one do you want? Which one do you want? And I was amazed at how pessimistic people are. The comment on Verizon is, well, it's an equity, it's going to be volatile. You don't think TLT is volatile? You don't think the 30-year treasury? Or they'll say, well, look at the balance sheet of AT&T, of Verizon, too much debt. They're supposed to have a lot of debt right now. It's free. We literally raise debt money for free.
Well,
why
the other
wouldn't they?
pushback is that the bond picture signals something recessionary or doomsday about the economy, which you don't want to be in equities if that happens.
No, but there are some categories of equities will fare better than others. And so companies that have billions of dollars in cash, companies that are paying a competitive dividend yield, companies that have a business that is seen to be less reliant on discretionary consumer spending. It's not that those stocks will not go down in a recession and or bear market. It's that they will provide padding or cushioning. And frankly, with where yields are, they might do as well, if not better, than some types of bonds in that type of environment. I don't know how much cushioning there is left in certain categories of bonds at these prices.
Let's focus in on the big stories we're watching today. Bob Pisani is covering today's turnaround in the market. Wilfred diving back into new controversial Brexit headlines with his new beard. And Mike Santoli joins us with his take on the plunge in yields. Bob, though, first to you on this nice rally we're seeing, up 243 on the Dow.
Loving the beard, Wilf. Loving it. We do have a rally. It's a bit of a rally in a vacuum, though. So just take a look here. Look at these energy stocks. This has been a horrible month for energy. Oil's around 55 all month. Energy stocks keep going down. Okay, today they're up. But most of the time, these stocks have been down double-digit throughout the month of August, if you take it a longer term. And many of them are near new lows. In fact, oil stocks are in the new low list routinely in the last several days. Same with retail. I don't care what you say. Tiffany and Chico's, they rose. They had very mixed earnings results. Chico's missed sales estimates. Tiffany saw comp sales miss in the Americas. These stocks, other retailers like department stores, look at the month on department store like Dillard's and Kohl's overall, generally down on the month. They're rallying on oversold conditions today. Same with banks. Most of them down double digits this month. They're rallying today. Even with the yields down today, they're rallying overall. And finally, same with the transports. What are we down? 9% in the transports overall here. Airlines have had a terrible month. Americans down, new low there. FedEx and UPS also not a great month. Again, rally on a little bit of a vacuum today. Guys, back to you.
All right, Bob, thank you. The British pound falling today as Prime Minister Boris Johnson made a controversial move aimed at improving his chances to deliver Brexit on October 31st. Thank God Wilfred's back. Did they not have razors on your vacation?
No, they didn't. That was the only reason.
I actually really like the new look.
I know.
I'm just wondering how many jokes I can make about it.
I think there's going to be a lot, and I accept I deserve them. Let's get to the story, though. The chance of a no-deal Brexit rose today, and sterling accordingly fell as Prime Minister Boris Johnson reduced the number of days of parliamentary business remaining between now and the Brexit date of the 31st of October. Deutsche Bank now puts a no-deal Brexit at 50% likelihood. Parliament returns from their summer recess on the 3rd of September, but will only sit now for about a week before being suspended until the 14th of October. This so-called proroguing of Parliament is not abnormal in itself, though the length of it under the current circumstances is extreme and has been labelled as, quote, constitutional outrage by the Speaker, John Bercow. Remainer MPs had two main ways to prevent no deal: pass legislation to tie the hands of the Prime Minister or change the Prime Minister. The lack of parliamentary time now makes the former much harder and increases the chance of a no-confidence motion in the Prime Minister early next week when Parliament returns and is in session. There you can see the pound 122.16.
So is the upshot that the chances of no deal go even higher? What are they now? Is that the base case?
So Deutsche Bank put it about 50% today. I think the chances ticked up compared to yesterday, though the pound's not at its lows of the last couple of weeks. It was a bit lower about 10 days ago. And the other good news that came last week was slightly higher chance of a deal. So kind of offsetting each other. I think the one thing you'd say with this is it reduces the time MPs have to act, but it probably also crystallizes opposition to the strategy Boris Johnson's taking. Therefore, if a table of no confidence vote is tabled, he has a higher chance of losing it. So everything to play for. The focus will be on what will be a crazy week in Parliament probably next week.
I still think it's funny that he has to ask the Queen to officially...
He does. A lot of people then saying, oh, the Queen's been drawn into it. She hasn't been drawn into it yet. If she'd rejected it, she would have been taking a stand because she has no choice but to accept the wishes of the prime minister.
Now, when do they use the sorting hat to find out who's in Gryffindor and who's in...
The sorting hat will be in about 10 days' time. Right. If he loses a vote of confidence, and then the hat gets put on the various other party leaders, and we'll see who's the temporary...
So whimsical, all this procedural stuff. I just love it.
It is, and it has all been taken to the absolute extreme at the moment, as people are correctly saying, and that's why the pound has been at or near these long-term lows of late.
When does the crown come back?
I think that's later this year.
Right.
I know the other tweet I like today saying season 17 of The Crown will be really interesting, including
it should be
now.
She gets involved in politics.
All right, for more on the signals we are getting from the bond market, let's send it over to Mike Santoli for today's market dashboards. Mike.
Yes, we're going to call that one tails and dogs to decide who's wagging who here in the capital markets. Also going to hit fight or flight, a little bit of an emotional reaction of investors as we've had this little bit of a rough month. And then prune and plant, a look at the rebalancing activity we might be seeing actually even today as we get to month end. And then vaults versus volts. That's a sector versus sector dynamic right there. But first, let's look at this interplay between the S&P 500, the 10-year Treasury yield. It's been pretty lockstep for most of the month, although you have seen, and I pointed this out maybe last week when we got this little bit of separation when the S&P 500 attempted to kind of escape the pull of lower bond yields. And we're seeing it again today, although I do think Bob's point's well taken, that we're seeing a lot of this index lift happening through this mean reversion activity, a lot of the laggards getting a bit of a bid, tech doing nothing today, and even utilities down despite the fact that yields are lower. So you don't want to extrapolate this, but obviously we've been kind of captive to this relationship for a little while. Josh was talking about the 30-year Treasury yield dipping below a lot of equity yields. Well, it's below the overall yield for the S&P 500 as well. Very, very long-term chart. The blue is a 30-year bond yield, and then we have the S&P 500 dividend yield. That's mislabeled, but the S&P 500 dividend yield is in orange right here. And basically, it's equivalent. Let's just call it that. Now, look, I don't think many investors are really choosing between these two assets for a long-term allocation. People are buying the 30-year bond because they're very desperately afraid, or they have to for some reason or another, and there's no yield left in the world. But it is a marker of just how relatively inexpensive equities have become. The long-term trend in dividend yield, by the way, very steady around 2%. That's something you can almost count on right now, guys.
Thank you very much for that. Stocks trading, as we said, near the session highs, 243 higher on the Dow. For more on today's market, let's bring in Alicia Levine from BNY Mellon Investment Management. Of course, Josh Brown's still with us as well. Josh, just want to pick up quickly on what Mike was saying there. Not only, of course, have we been focused on yield so much for the broader market, but for banks in particular, which are rallying today as the yield has continued. The yield curve has continued to invert.
I think there's just some technical things in the market that cause what looks to be very counterintuitive behavior on an hourly or a daily basis. That's not really overly important. There's not necessarily a linear, one-to-one relationship on a daily basis between, for example, what a credit spread does or what a yield spread does and the sector that should benefit or be hurt by it. So I think let's just say like it's August 28th, right? Is that the date? Mm-hmm. A lot of people are just not involved or not engaged. And while they're away, their algorithms may be fishing out some weak shorts in the bank stock. I mean, it could be anything. I'm making that up.
Well, you're seeing a lot of the underperformers actually do well today. It's not just banks. It's energy. Alicia, I mean, as we wrap up the month.
One quick positive, though, to that point. Yeah. We have done nothing since August 5th. We're at the same on the S&P. So it's almost an entire month of thrashing to and fro. We're in the same place. And maybe it's a positive. You could say there's been no leadership. The FANGs all look terrible. Every one of them. Look at a chart of any FANG you want. And there isn't any sector that's really done well this month away from the yields. So maybe that's like a good thing. Like the market has really not been killed. We're right near all-time highs with really no leadership at all to speak of.
Alicia, I was going to ask you, I mean, if you look at what actually worked in August, where there was leadership in a sort of leaderless market, it was the staples, the REITs, and the utilities. And utilities and REITs are already trading near record highs. So, I mean, do you follow Josh into those kind of REIT stocks for September on this idea that yields may continue to be in charge?
So I would just want to reiterate something that Josh just said, that not only has the stock market done nothing since August 5th, it's also done nothing in a year.
Yeah.
So we've had a lot of indigestion in that 12 months, both on the up to the upside and to the downside. And it's just an expression that the market continues to say, within 5 to 6% of its all-time high because yields are so low. So you have to expect that yields stay low, lower for longer. And to that extent, you really need exposure to the defensives for that reason. Having said that, they're not cheap, but they will work on a tactical basis. So you have to know why you're buying them, right? So if you're buying them because you understand that there's pressure on yields, then you're fine. I think you need to have some optionality here, though, if the trade goes the other way.
Alicia, if we do see easing from the likes of the ECB or the Bank of Japan coming up in the next few weeks, is that good for US equities or conversely bad for them based on what it might do to the dollar?
So the dollar has a floor on it, but the interesting thing here is, for instance, why is the euro not at parity with the dollar? I've asked myself this question all year long. I think we've seen somewhat of a ceiling here as well. Any central bank cutting will be positive for equities regardless, simply because it adds liquidity, and particularly with the ECB, they're going to start buying equities as well. So I think that's just very positive for markets. Having said that, the real issue with the dollar is China, and it's less what's happening with Europe, because it's clear where Europe is going. But it's been obvious for the last year.
Alicia, thanks for joining us.
Thank you.
Great to see you as always, Alicia Levine. Still ahead, stocks staging a rebound today, but investor sentiment hovering near multi-month lows. We'll discuss what that means for the market as we head towards a new month.
Plus, one Wall Street firm out with a new note saying it's time for a change at Tesla. The analyst behind that call tells us the one thing the company needs to be doing right now. And as we head to break, a quick check on our data tracker today. Mortgage applications falling 6.2% last week, led by an 8% drop in refi applications, despite the fact that they are up year over year on those lower rates. Closing bell will be right back. We've got almost 45 minutes left of trade, and a Dow up more than 200 points.
Okay.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and...
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
At the Bank of Santander, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage. Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts, and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
It was a Sunday morning when I jumped on the tube
and decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of off-peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters. £1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
Welcome back to Closing Bell. 45 minutes left of trade. Time now for Word on the Street. Needham putting out a note about esports, calling it a high-impact and investable sector. The firm also saying that time spent on other media like TV and magazines in the U.S. will increasingly be cannibalized by esports with the 18 to 25-year-old demographic. Josh, that's you.
I suppose it is, yeah. I don't know that anyone's making any money from this other than a handful of influencers like Ninja. Like, I don't feel like this is a big business in real life. I know it's exciting, and it could be a big sport, but...
They say top-line revenue for the whole sector is growing at 23% per annum. Someone's generating revenue, at least.
Yeah, no, it's just video game makers are making a lot of money. But I'm saying, like, esports, there's actually an ETF for that now. It doesn't even own the video game. It owns the esports-related companies. People selling headsets and joysticks. It's not a big business. Might be one day.
Next, word on the street. Deutsche Bank naming JetBlue as a catalyst call, saying the airline's recent pullback provides an attractive entry point. The firm noting that JetBlue has attributes to help mitigate trading impact, including having less international exposure. It's up 1.7% on the news. JMP Securities is out with a note saying Elon Musk needs a stronger leadership team at Tesla. The firm noting that Tesla still needs Musk as a thought leader and change agent. JMP Securities maintains an outperform rating on Tesla stock with a $337 price target. Let's bring in the analyst behind that note, Joe Osha from JMP Securities. Joe, you've been a bull on the stock for some time. Is this a new change for you to sort of criticize the current leadership structure? You introduce in the note a concept of great long-term founders. Is Musk one of those?
Yeah. Well, for starters, I think part of the challenge that we have is that the conversation's been a little too much around Elon per se. What's he tweeting? What's he smoking? What he's saying? And what I'm trying to do is to shift the conversation a bit and say, look, let's look at other companies. Look at what Brin and Page did. Look at what Zuckerberg has done with Sandberg, and to say, look, evaluated against those companies, it's not unreasonable for Elon to be asked to share power. But one idea you had earlier, you were talking about the sorting hat. Maybe we could put the sorting hat on Elon. That might help.
Hey, Joe, with all due respect, though, you can't have it both ways. The only reason this company has the market cap it has and has had the ability to raise money over and over again at incredibly high valuations is because of the public's infatuation with Elon. So he is a positive on that side of the ledger. So then you can't say, well, why are people so focused on his erratic behavior? You can't have, right? Like, you got to kind of take what comes with the territory in this situation, don't you?
Well, it depends. I think if you're at the board, it's a difficult needle to thread. As I point out in the note, you can't simply throw the guy overboard, but it's not true. If you look at other successful companies going all the way back to Grove and Moore and Barrett at Intel, that a founder visionary just gets to be the captain of his own ship with nobody else saying anything. So what I'm saying is that the board really does need to get better at threading this needle and do what other boards have done, which is to make him accept some operational partnership. I don't think that's unreasonable.
Is this a serious board in real life, or is this like his cousins and friends?
I'm not going to, I won't comment on that, but I will say I think that, this is less about me criticizing Elon. He's a visionary. He is what he is. I will say that it's time for this board, and I said this in the note, to kind of get their heads up, look around at other successful companies and learn from that, rather than just saying, well, Elon, it's special, so we can't do anything. There's plenty of other examples out there of visionaries who've been, asked or volunteered to share power, and that's what needs to happen here. I really think that.
So are you still at 337 on your price target and telling people to buy, despite, what seems like a really major issue you have with the company's management and its governance?
Yeah, and this is where it gets sticky, right? Because, I'm obviously being a little critical here. Look, I've test-driven the Audi, I've test-driven the I-Pace, I've test-driven the BMW i3. If there's a competitor out there to the Model 3 yet, I haven't found what it is. So I am buying the company because of that. And boy, I'd be buying, I'll tell you what, the day that they bring in a strong operating partner for Elon is the day that I actually raise my price objective. I'll say that.
All right, Joe, thanks for joining us on the call. Joe Osha.
Thank you very much.
One number that matters on Tesla, which is 180. $180 a share has been support for this stock for almost 6 years now. Go look at a weekly chart going back to around 2011, 2012. It has never been below save for one episode in 2016.
420.
Would you buy it at 180 though? You never want to touch this stock.
No, if it breaks 180, I don't see how you can stay. I mean, that has been so reliable. 6 times, I think, the buyers have come in at that level to rescue this stock, and it spent a few minutes below there in 2016. But that really, to me, if you look at a long-term chart, that seems to be the line in the sand where below that level tells you a lot of big money have given up finally on the story, but they may never do so. Like, it's, it's too soon to know. This has always been in my too hard pile.
Kathy Wood from ARK Invest as well, coming up in the second hour, so we can address. She loves Tesla.
All right, under 40 minutes to go before the bell, and we're near session highs for the Dow, up about 240 right now. Leading the charge is Dow Inc. It's a stock that for the month of August was down 12.5% still, but it's up today. United Health, Pfizer, and UTX also among the biggest gainers. After the break, Peloton pedaling toward an IPO. Details on the latest unicorn with huge losses that is set to hit the public market and whether you should hop on board next.
And later, a slew of retailers set to release earnings today after the bell. We'll bring you results from PVH, Williams-Sonoma, Five Below, and more as soon as they hit. And as we head to break, here's a check on how commodities are trading today. Oil getting a lift as U.S. crude inventories fall. Gold still hovering near 6-year highs, and silver higher once again today. Gold just lower as we speak. We're back in a couple minutes.
When I lost my sight. Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets are only £3.19. And a 4-pack of Grower's Selection sweet corn cobettes are just £1. Bring it home with Asda. Save money, live better. Selected stores online, subject to availability. Cod 260 grams.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at Chessington.com. It's Britain's wildest adventure for all the family.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Welcome back. Let's dive into what Wall Street is buzzing about today. Up first, a home fitness company, Peloton, filing to go public at the NASDAQ. Peloton has been previously valued around $8 billion. We should note CNBC parent Comcast NBC Universal is an investor in Peloton. Josh, what's your take on this one?
People are going to be so mad about this. I think it's a great product, by the way. There has never, ever been a long-term successful fitness stock on Wall Street. I'm really, really sorry to say that out loud. I know nobody wants to hear that. I was here the day they did the Fitbit IPO. I said the same thing probably. These stocks do not work. Now, the one that's proving me wrong currently, Planet Fitness, looks incredible.
Yeah, that's
looks incredible. No. That chart is sick. But we're talking about a couple of years. So I'm saying, I'm not saying you can't trade names like this. It's just people are fat and lazy by nature. They just are. You are the exception. I am the rule. And I'm going to tell you something. I do a fitness thing.
I
do
was
it for
the exception, but
you look phenomenal, even with the beard. Don't listen to her.
I wasn't criticizing
There's
it. I'm just
fitness
mocking.
fad for every generation. There's multiple, whether we're talking about the food or we're talking about the equipment or the hot gym. It never lasts. It has its moment. I can reel off a list of Bally's, Lane, even Equinox now might go through a recession for itself. Soul Cycle, they pulled it. It just shake weight. Like these are not long term things.
I mean, I have to say, I
Sorry.
love the product, but this
So do I.
is so expensive. 10 times sales roughly.
Yeah, dude,
Uber was 7 times sales.
It's
losses widening. It's.
They're not even trying to make money though. Like, and
They
I
say
think
they're a media and tech company. And
that
so
drove me mad. They say they
valuation-
sell happiness. Come on, I love the product, but that's pathetic.
But wait a minute. The people that use it, they really do. They really do
They're
love it.
fanatical about it. Yeah.
I agree
That's
with that.
great.
And the
I
only
love
thing
it.
I would say as well, the retention rate is incredible, well over 90%. And when you've shelled out $2,000 on the
Of course you're gonna have high
on the
retention.
product, you're not going to cancel it, which is an interesting bonus point. The big reason why they're increasing their losses is what they're paying to the music publishers, and I think that's a massive unanswered question for them, and it could be a bottomless pit.
Well,
relative to their earnings.
Pandora is paying the same licensing fee, and that's not a great business. But I think the bottom line here is the retention rate is high because there isn't another one. There's you can go out to a class or do this or ride an actual bike, heaven forbid. There's not a lot of competition, but there will be. If this really takes off, of course there will. So
People are really into the mirror now.
yeah, I'm going to tell you though, I hope I'm wrong. I root for companies like this to come along, go public, pay their employees a ton of money, and do well. I want it to work. Just for me as an investor, I can't get excited about this.
Another buzzy one here. Popeye is selling out of its new chicken sandwich just 2 weeks after launch. The company projected inventory would last until the end of September, but says due to high demand, it's likely to be sold out across the entire country by the end of this week. Popeye is owned by Restaurant Brands International. Meanwhile, KFC tested out those plant-based fried chicken made with Beyond Meat at one location in Atlanta yesterday. That item sold out in less than 5 hours. So which is it? Alternative fried chicken or chicken sandwich?
I'm going to tell you the fried chicken sandwich trade. It's not Popeyes.
Big Shack.
No. I'd love to be able to say that. You don't have Chick-fil-A public yet. It's not Wendy's. It's Twitter. This whole thing took place on Twitter, not on Insta, not on Facebook. They put out a chicken sandwich, and then they sarcastically quote tweeted a Chick-fil-A tweet. And that sparked this entire explosion of people running out to see what this Popeyes hype was all about. It literally was not even a promoted or paid tweet. It was a quoted tweet. The whole thing exploded. They'll be studying this in business schools. The trade is Twitter. And by the way, look at the technical setup on TWTR right now. This stock, no matter what the market throws at it, will not budge over 41, 42. I think it's just primed to
Had a
launch.
good year so far. Restaurant
that's
Brands,
the
though,
play.
International has also had a very good year. So maybe it's a double.
Well, a lot of fast food names have great looking charts too. You're right.
So has Beyond Meat. It's had a good year.
Yeah, so is Yum Brands.
Time for a CNBC News Update with the one and only Sue Herrera. Hi, Sue.
Hello, Wilf. Great to see you. Hello, everyone. Here's what's happening at this hour. Dorian is now a Category 1 hurricane with winds increasing to nearly 75 miles per hour with stronger gusts. The storm is currently near the U.S. Virgin Islands. It is expected to continue to strengthen over the next few days as it heads towards Puerto Rico. The ongoing measles outbreak in New York is putting the U.S. at risk of losing its measles elimination status by October, according to a doctor with the CDC. There have been more than 900 cases in New York alone over the past year. There have been more than 1,200 cases nationwide. Still pictures and satellite images suggesting that North Korea may be constructing a new ballistic missile submarine. The images appear to confirm reports by North Korea last month showing leader Kim Jong-un inspecting the vessel. It would be a significant step forward in North Korea's nuclear ambitions. And Apple apologizing for allowing contractors to listen to a small percentage of things that people said to the digital assistant in an effort to give users more control. It suspended the program, but it will relaunch this fall and let users opt in to help Apple improve Siri. So be careful what you say. That's the news update this hour, guys. I will send it back downtown to you. Sarah?
All right, Sue, we'll see you next hour. In the meantime, let's go to Mike Santoli for the second dashboard. Mike.
Sarah, we got the fight or flight hormones running through the markets, and it seems like people are fleeing more than not. Take a look at the CNN Money Fear and Greed Index. It's a pretty commonly watched indicator of risk appetites in the market right now. What's good about it is it uses market-based indicators. It's not surveys, it's not what people say, it's not Google trend searches or anything like that. It's technicals of the market, demand for protection, and risk appetite. So you're seeing this, obviously it oscillates in this range. It's a 0 to 100, but this decline here is very telling. I think it got below 20 yesterday. You had basically the lows in the single digits for a while last December. But remember, in December, you were on your way to a 20% decline in the S&P 500. It really was an accelerated, steep correction. Here, we're less than 5% off the record highs. And so you did see a welling up of concern, of anxiety out there. All else being equal, I think this is basically a tailwind for stocks eventually to find their footing and maybe get a decent recovery going. This can last for a little while, but I do think the sentiment is something that's starting to round into favor for the bulls, along with perhaps relative valuation for stocks, guys.
Relative valuation affected also because of the change in yields, Mike? Or
for sure, yeah. I mean, I think right now you can't necessarily make a great case that equities are, in an absolute sense, screamingly cheap. Of course, profits have flattened out, and we have some risks, perhaps, of a global slowdown. But relative to anything you want to compare it to, whether it's corporate bond yields or governments, you definitely look like the stock versus bond valuation equation is tilting toward equities right now.
All right, thanks, Mike. After the break, UBS slashing its view on equities in the wake of increased trade tensions. We'll speak with the firm's head of America's asset allocation about where he thinks you should be putting your money instead.
Interactive Brokers charges
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at chessington.com. It's Britain's wildest adventure for all the family.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire.
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its lights-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
Welcome back. 25 minutes left to go. Here are the main things driving the action. Oil and energy stocks leading the market higher. We're slightly off the highs of the session, but still up 200 points on the Dow. Tariff news continues to dominate the headlines. The USTR confirming that additional tariffs will go into effect in September and December, and yields slip again. The 30-year dropping below the dividend yield of the S&P 500.
They're making fun of you.
I know. I was...
We've got a clever group of producers.
Hadn't we already pointed that? That was in a break, so now we have to do it again.
You're going to have to deal with it for a few hours here. All right, stocks making a comeback today, but our next guest's firm just slashed their equity exposure as trade tensions ramp up. Joining us to discuss is Jason Draho, head of America's asset allocation at UBS Global Wealth Management. So how big of a shift is this for you guys at UBS as the world's largest wealth manager, telling people to go underweight on equities?
I would say this is a modest shift. We've gone from kind of a modest overweight in equities relative to our benchmark from a week ago to now just a modest underweight. So I wouldn't say we've gone bearish. We've gone a little more cautious just because these trade tensions have continued to escalate beyond what we thought was kind of realistic to expect about a month ago. And then you look at the global growth data, it continues to show some weakness. So at least in the near term, there's just enough sort of uncertainties where we feel like it's kind of prudent to dial back risk-taking overall in the near term. But on a long-term basis, I think the fundamental outlook hasn't changed that much. So we're still trying to tell clients to stay invested in equities. This is not a signal to kind of sell equities, go into cash.
Where does the money go into then that you're selling out of in what you've readjusted? Into bonds at these levels?
Most of the shift has gone from essentially out of equities into bonds. I know there's the debate about kind of the relative valuations, the relative yields. The thing about bonds is that they have two attractive properties right now. If you look at the yield as a measure of its attractiveness, that's understating its total return. So just take the 30-year Treasury bond. Over the past month, if you'd bought the 30-year in kind of late July when it was yielding like 2.5%, its total return in the past month is around 12%. That's a pretty attractive return when equities were down about 4%. The other thing is that if you look at the correlation between how bonds have performed and equities have performed, it's been very negatively correlated. So bonds have been rallying when equities is selling off. From a diversification perspective, that's kind of ideal. So even though the yield is lower, now we've seen the 30-year versus the dividend yield on the S&P 500, from a portfolio perspective, bonds actually look pretty attractive, at least as a more kind of cautious play for the next kind of 3 to 6 months.
Hi, Jason. This is Josh Brown. So as a wealth manager, we get this question from savvier clients, and I'd love to hear your take on it. What do you say to people who say most of the reason to own bonds at this point is really for ballast or dry powder, so that if there's a negative event in stocks, you have somewhere to draw liquidity so you can buy more stocks at that moment or do a rebalance at a regular interval? What do you say to the people who say that with yields where they are and the crowding, quite frankly, into bonds of almost every duration and yield, that protective feature of bonds will not be there, specifically if the reason there's a negative market event is centered around the bond market, like having our credit rating slashed or some sort of a fixed income blow up somewhere else in the world? Like, are bonds going to protect us the way they have historically in the context of an asset allocation for a regular investor? What's your answer to that?
I think they will. Now, we have to differentiate between what would be very safe bonds. I think U.S. Treasuries being kind of the safest
sovereign
out there.
Bonds, Treasuries, right.
So, exactly. Credit, anything that's kind of credit related, that's where there could be some potential stress. We know there's less liquidity in those markets. You're taking credit risk, so if you get an environment that could be bad for growth, those spreads are going to widen. So really what we're suggesting is certainly going to safer government bonds. It would really take something kind of truly cataclysmic for those yields to rise in that kind of scenario. Nothing that we see, at least in the near-term horizon, would suggest that. And even with yields low, it doesn't take much, given the long duration of these bonds, to actually still get a pretty good return to at least offset some of the equity risk. And if things do improve, and we don't think this is the end of the cycle, we don't think a recession is going to happen in the next 12 to 18 months, when things get better, if there's some sort of truce on that, growth data gets better, then we look to kind of reallocate back into equities, because the long-term valuation relative to bonds is more attractive.
Within equities, it looks like you're somewhat defensive. You like consumer staples, but you also like consumer discretionary and communication services, which would suggest the non-recession call.
That's right. So we were, say, a little risk on in the sector allocation, a little more pro-cyclical. And what we've done is kind of dialed that back to more balanced, slightly more defensive position from a sector perspective. And the overweights that we have, consumer staples, consumer discretionary, comm services, those all play to the U.S. consumer. And if we look at the U.S. economy, the strength right now is the U.S. consumer. It's the job market. So we want to be positioned to where there's strength. The sectors that we're underweighting right now, energies, industrials, and tech, they're more tied to the global economic cycle. That's where there's weakness. We're seeing it outside of the U.S. more so than in the U.S. So we'd rather take in kind of position where we think there's kind of stronger outlook for the consumer versus the potential further weakness in the global cycle.
Jason, outside of the US, is there any country or region in terms of equities where you're significantly overweight?
There's a couple of countries we like within emerging markets. Brazil is one of them. It's a very kind of idiosyncratic story based on initially sort of the pension reform, that legislation that's been passed, but other signs of structural reform that should help kind of over the long term kind of lift the growth. And so that's one we like. And also we still like China within emerging markets. We think they're going to continue to do stimulus incrementally to offset the negative headwinds from tariffs. But the stimulus that they've done thus far has really been more beneficial to the domestic economy. It hasn't had the spillover effects globally. So if China keeps doing it, that's good for the Chinese economy, perhaps Chinese stocks, but maybe less beneficial to other parts of our emerging markets. So those are two regions that we like.
Jason Draho, thanks for joining us.
My pleasure. Thank you.
19 minutes before the bell, here is where we stand in the markets, hanging on to a more than 200-point rally here on the Dow, 233. S&P's up more than 0.5%. NASDAQ bounces to the tune of 1/3%. And the Russell 2000 index of small caps, it's been a big underperformer during the month. It's having a more than 1% day. Treasury yields are lower, which is interesting that stocks are able to bounce, though they made new lows earlier today and stocks were under pressure. Once they sort of came off those lows, stocks rallied.
People say, like, honey, how'd the market do today? I don't know. The yield curve situation got way worse, and stocks rallied, especially banks. I don't really know what happened. I mean, that's the story.
Which is why the Russell's one of the outperformers, because of the banks.
Yep.
Still to come. By the way, Mike Santoli told me not to read into too much in the action today, 2 days before the end of the month. When we come back, breaking down Wall Street's recession risks, we'll quantify the geopolitical risks that could impact your portfolio.
And after the bell, earnings results from Box, PVH, Williams-Sonoma, and many more. The key things to watch in those earnings reports when we come back.
Flight number 417 is busy.
You should be mad at her. Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I didn't choose you, you chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you can quickly submit meter readings or book an expert engineer, leaving you more time for watering the borders or a spot of sunbathing. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
What's better than being at one with nature? How about being at two with nature? Get a 2-for-1 companion voucher valid for 2 years when you spend £10,000 each year on the British Airways American Express Premium Plus card. Probably
Probably best not to go for the silent retreat then. Search VA Amex to find out more. Representative 76% APR variable. Annual fee applies. Applicants must be 18 years or older. Subject to approval. Terms, taxes, fees and carrier charges apply.
15 minutes left of trade. Some individual market movers here for you. Shares of Tiffany are higher now after reporting an earnings beat this morning. The luxury retailer was helped by double-digit growth in mainland China. It also maintained its full-year sales outlook, even though most of the comps in the Americas, Europe, Japan were lower. That bottom line beat definitely rewarded. They're dealing with lower tourist spending in the U.S., something widely telegraphed, and also softness in Europe and the economic picture there. Despite posting an earnings and revenue beat, shares of Autodesk are sinking after the company lowered its fiscal 2020 earnings forecast. The software company also narrowed its sales outlook, citing economic and trade uncertainty. That stock well off the lows, down only 7%. It was down double digits this morning.
We've got lots of retail stocks reporting after the close, but we also have earnings from Box, and Josh Lipton has a preview of Box earnings. Josh.
So, Will, here's what we expect from Box. A loss of 2 cents in Q2 on revenue of $169.5 million. That would imply a jump of about 14%. Stock is down nearly 20% this year. It's down nearly 50% in the last 12 months. The company has disappointed investors when last reporting results by lowering its revenue guidance for FY 2020. So that metric will again be in focus when the company reports day after the bell. The company is guided for between 688 and 692 million. Sarah, back to you.
All right, Josh Lipton, thank you. We'll also get a slew of retailers reporting after the bell. Contessa Brewer has the key things to watch in PVH and Williams-Sonoma. Contessa.
Hi there, Sarah. Let's start with Williams-Sonoma. The home decor and cookware company is trying to insulate the impact of the U.S.-China trade war, moving a substantial amount of production out of China and hiking prices in some cases. In May, it raised its profit outlook for the year, and analysts expect comp sales to be up 3.3% overall. That includes Pottery Barn, West Elm, and Williams-Sonoma. Earnings growth here expected to be 8.6% by analysts. Let's turn to clothing retailer PVH with brands like Tommy Hilfiger and Calvin Klein. It's also grappling with tariff challenges and slowing retail growth amid a volatile global stage. Last year, it imported about $400 million in inventory from China. This year, last quarter, it cut its annual profit forecast by 10 cents a share. Analysts look for an earnings decline of almost 14%. Wilf?
Contessa, thank you very much for that. We look forward to those numbers as well as Box after the close. We have 13 minutes, 12 minutes now until the close. We're up 235 points or so on the Dow. Up next, we've got your last chance trade. We're back in a couple minutes.
So, how are you feeling? The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business from 168 a month with 6 years 0% APR. Vauxhall, British brand since 1903. Conditional sale, minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance, subject to status. 18 plus, small business users only. T's and C's apply. Search combo offer.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I'm home. Hi, Mum. Wow, what's that? Saltwater supercars from Shell. Toy cars that run on salt water.
Science-fueled family fun. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
Track ready.
Check.
Saltwater ready.
Check.
Go!
Fill up on fun with saltwater supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
Make sure you're uni-ready with our huge range of practical essentials and home-from-home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Could you email me the part about Geico, making it easy to switch and save hundreds?
Oh, yeah, sure.
You don't know my name, do you?
Of course I know your name. I just get you mixed up with the other guy. What's his name? What's your name?
Switch to Geico. You could save 15% or more on car insurance.
Could you just tell me? I want this to be over.
You should be mad they gave this guy a promotion. You should be mad at forced camaraderie. And you should be mad at tech that makes things worse. But you're not mad, because you have E-Trade, whose tech makes life easier by automatically adding technical patterns on charts and helping you understand what they mean. Don't get mad. Get E-Trade's simplified technical analysis.
The Closing Bell is sponsored by E-Trade, the original place to invest online.
Welcome back. We've got just 8 minutes left of trade. We're higher by 240 points on the Dow. That's the sector heat map. Only one sector lower on the S&P. That's utilities. Topping of the list is energy, followed by consumer discretionary, industrials, and staples. Green across most of the screen. And Russell, the small cap index, leads the charge with the major indices at 1.2%. Time for the last chance trade. Josh, what are you going for today?
So what if you could have the greatest investor of all time do the buy on the dip trade for you, assuming we get